So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here. No trade calls, recommendations, or responsible and stuff. We're here for educational purpose only. So, welcome to this impromptu session. Just talking some charts. Let's go through some charts. Let's see what happens. I wanted to do this again. I committed to try and do these once a month. So I waited a little bit because I did an interview where I talked about stuff with the CMC. So I put it up on the blog. So I just didn't want to, I wanted to wait a little bit to see if anything had changed. As always, if anybody wants to like, share these live sessions, that's always very welcome. Gives me a little bit of encouragement, and let's get cracking. So right here, if anybody has any comments or any questions, don't hesitate to ask. I know a lot of people are shy, so I'll just go through and look at what I'm looking at and where we are. So basically, I think the key underlying theme here is that we're going into the end of the month, end of the quarter. It looks like we should see some rebalancing. So especially seeing some stocks for sale all into month end, quarter end. And in terms of the overriding theme, we're still in a situation where the markets, the participants believe in the fact that we're going to cut tomorrow, right? And rates are going back to zero. We're going to start QE, joke. But basically, all the central bankers, actually, Lagarde is speaking here, but all the central bankers, whether you're talking about RBA, the Fed, ECB, etc., they seem to be clear. They're being very hawkish. And the message is rates have not peaked. And once they peak, right, because the inflation fight isn't over, they will be held at a peak for still some time. So again, you have to, ignore that at your own peril here. Going into the July FOMC meeting, the market now is pricing in about 77 probability of a 25 hike. I would expect the Fed to want to see that into the 80s, 90s, again, especially if data confirms. Keep in mind, this week we've got some very interesting data points, but there are a lot of data points coming out all the way ahead into the next July meeting. So it will kick off this week, apart from the fact that we have all the central bankers in Portugal that will be on deck tomorrow. But, basically Thursday, Friday, we got that final GDP and basically the core PC. So that will be interesting. However, bar something crazy going on in terms of the data points, you would expect these month-end flows, quarter-end flows to take precedent. And again, keep in mind that we're going into the 4th of July weekend, so we'll have to see how the market wants to be positioned here. Here, we're in a situation where the higher time frames are in play, and it's just this rotation off the highs, right? We got a very, very pure pump all the way into OPEX, and a beautiful little reversal, right? So we've discussed this. I can't remember if we discussed that in that CMC interview, but we've been discussing it a lot with in the daily webinars and stuff. This was a classic pattern, right? We got that pump all the way into the 4,500, into that OPEX, then bam, the week after June, OPEX it's kind of like 80% down week. So very classic action here. And, we're slowly pulling off those highs. So right here, this is still quite textbook. A lot of people are going to be talking about this JPM collar level, 43.20 into the end of the month, end of the quarter. But right here, I would still continue to just focus on the charts. So what's happening here? We've got a bullish rotation out of this sideways range on the ES, right? And basically what's happening here, you've got, hold on. So you've got this bullish rotation outside of this range, which pumped, and now we've got a stall. So what would I be looking at here? Well, basically look at the 10-day moving average as a short-term bull bear line. You've got an open gap here that's going to attract as long as we hold below the 10-day moving average. But here, especially into the end of the month, end of the quarter, you would expect to see this to try and come back down all the way into at least, the 50 DMA, right? Keep in mind that as we've been discussing, off those highs, you could easily see something like, this correct all the way back into the 200 DMA, a 10% correction. And this is still trying to hold a bullish rotation. So it's not the end of the world, but it is a technical correction. And what you're seeing is very similar. YM back below that 34,000, Russell still holding heavy, and NASDAQ off those highs, failed at the 78% retracement of that big move down. So everything is moving in sync. And also, if you're looking at the composite of the FANG names, once again, as long as this holds below the 10-day, you would expect that 50-day to attract. And especially if we're going to see selling of stocks into month and quarter end, you'd expect that NASDAQ to stay very heavy. What is interesting in this dynamic, which we hadn't seen some other times when US getting sold, you still saw that Nikkei or Euro stocks and DAX getting pumped. And here you've also in a situation where you see the DAX failed at those highs. So this is also trying to pull back. And this is a fairly critical level, because if it can't hold here, this could open up a much bigger correction on DAX all the way back into this previous low, into the 15,000. And if you look at Euro stocks also, it's not looking pretty off those highs. Now, it's still holding an upside move, but it's worth watching because a break below could be a little bit heavy. And the other one is also the Nikkei. Now, one thing which I would be looking at is, apart from the weekly closes, the monthly closes, right? So this is still not the base case assumption, but you see how Nikkei flew through those highs and is stalling. Now, from where we are here to close the month negative, it's just a 5% move. So it's not my base case assumption, but it's something I would keep like half an eye on, because it could be an interesting development. Because if that were to close negative on the month, this would be a very aggressive failure pattern at highs. And if you're looking at the monthlies, again, here you can see that Euro stocks are struggling, DAX, it's not going to take a lot to get a monthly close, and that would be yet another negative monthly close. So I think this is a dynamic that I would be keeping a very close eye on in terms of what's happening on the stocks. For now, it's just a healthy little correction. It's a correction back down into some stronger levels, those breakout levels, but I would be keeping half an eye out on those monthly closes, especially on Nikkei, DAX, and Euro stocks, okay? In terms of gold, as we've been discussing, and I was highlighting this on the monthly, it just doesn't really make sense to try and get aggressively long at the 2,000 on gold. Here, this is very, very ugly failure. So here, nothing has changed here, and I would still expect this to try and come back down and correct a little bit more. You can see similar to, it's the same chart across the board, right? That 2,000 10-day moving average, as long as it can't get back above, the path of least resistance is a move back into this confluence of all these moving averages and the 1800 level. So that's what I would be keeping an eye out for on gold. If you're looking at crude is extremely messy here. Now, the stick save needs to happen here. This could get very ugly in terms of a flush. I mean, will you get a flush that gets bought? Maybe. Ultimately, if you're thinking about the 70, 65 level, is probably a level where everybody's kind of happy or not too unhappy about. So it's just hovering here, but it's really hard to get long, because you can even see this on the weekly. The 10 week keeps on getting sold. So I think here it's very rare, or we tend to say when you've got these kind of candles, you tend to have unfinished business below those lows. It's almost too easy for the market to rally off and not flush stops below there. So maybe we need another test through that and hold to get some upside traction. But here, you want to be careful, because if you, look back on the chart, this is a level where you could easily get some flush action along wick. If you get a big flush and then a reversal back higher, this could set up a nice long, but I definitely would not be trying to buy a slow grind lower, and I would not be trying to catch a falling knife here. You need to see some buying, you need to see some volume, you need to see some strength, especially above that 70, ideally with nice exhaustion to the downside. That's what I would be focusing on. DXY, again, this is a key part of the story, and you can see that we're kind of hovering around this 103. What we've been discussing here on the DXY is still the fact that we're stuck in this broader range, which is 106, 103, 100. And as long as we're in this range, it's really hard to be extremely confident about anything. And here, market is likely looking for direction. Really what it probably boils down to is, does the is the market going to have to price in terminal rate at 6, 6.5, 7 or something, or are we happy as is? And that's really going to be the key. So here I would say, don't be confused by velocity of move inside range. As long as we're hovering around this 103, it really doesn't mean anything. The market is waiting for a better catalyst. The market's waiting for some data point. The market's waiting to get a feel for what's going on. Clearly below, there's a risk of a flush, But as the moment we tried to trade back above, don't be surprised, especially if it's on a data print or on some comment, don't be surprised if you see a quick pop back into this 200 DMA trying to make a run back into the 106, right? Hey, how's it going, Wada Shambles? And again, yen, there's not much going on yen. This is messy. We're starting to see some jawboning from Japan and Co, but really there's really nothing to do here, right? It's messy. As long as we're trading above this breakout point, you see the moving averages are turning. The 10-day here is coming in with this confluence of this previous level. Any dip that holds here is just going to continue to be a grind higher, trying to make its way back into 148. And as long as we don't trade below, this is probably just the grind higher pain trade. Back below the 10-day moving average and this previous high here, you could get a quick correction back into that 200 DMA, but really I think this is a suboptimal instrument to trade. I think there are far more interesting things to do, but I would again be focused at this 42 level as a pivotal level, either for a grind back into the 148 or for a possible retracement back into this 138. Euro, Lagarde is speaking. It's kind of stuck here. There's nothing much going on. It's very, very messy. With Lagarde's hawkishness, you'd expect this to globally try and continue to have some kind of a bid tone. And unless you get a general aggressive risk-off tone, risk-off flush, very aggressive repricing from US data or something, this is probably going to continue to chop around here, not doing much. If you look at Bund, see here, this is something to watch. A lot of people be trying to short this in the hole. You want to watch what happens here, because if it starts to get some outside traction, this could really catch a lot of people off guard. I don't trade this really, but again, here it's in the sideways range. It's kind of like that dollar. We're still looking for some kind of catalyst. And as you can see here, again, bonds are stuck, but they're grinding higher. Are we going to see bonds bought and stocks sold into month end? We'll have to see. Again, keep in mind, you could get a lot of funky action into this month end, quarter end. That is, price insensitive flow, that just stuff that needs to be done. So you don't want to be caught off guard. So I just don't think there's an awful lot of edge here on the bonds either. If you're looking at stocks, what's interesting is, again, it really looks like we're struggling to catch a bid, right? It's just not, they're just not making much traction to the upside. Apple, AMD, look at the weekly closes, look at this monthly on AMD. Is just after those pumps, it's done, right? There's just no more traction. You had these big high volume pump, and then it's just completely can't catch a bid again. Amazon, even yesterday, a lot of people printed new highs and it's failing, almost closed below the 10-day. Google losing ground. Microsoft losing ground. So again, as we said, Nvidia losing ground. This really looks like it's a textbook correction, which should continue to get traction into month and quarter end. And then depending on the data, we'll have to see if it can turn into something more or not, right? Now, a lot of people also pointing to the fact that if you look at, Hang Seng is not doing too well. But again, China trading a little bit heavy. I don't look at those too much. One thing, if you're thinking about that, and that you could also point to, is you can see the action on copper is not pretty. Friday, Monday was not pretty. So everything, again, is pointing to a little bit of heaviness across the board. I just like to continue to point out that ES, in terms of the bigger picture here, the move that ES is in is A to B, back into C, 50 back, and this is pointing to an aggressive move all the way back into the 5,400, right? So that's the move that's trying to play out. So keep in mind here that if you get any correction that holds this whole move, and I would call it the 4,100 really, this is still the risk. And unless the market's going to have to price a terminal rate that is much higher, this is probably what's going to try and play out. Now, again, if the market has to price in a terminal rate that is much higher and you see us trading back below the 4,100, challenging the 200 DMA and getting no traction, then that's going to open a very ugly move, or a bigger repricing. But right now, this is still just a little bit of a correction after what tend to be unhealthy moves when you see all these gaps and these price and these gap higher like that, right? So that's pretty much what I'd be looking at. A lot of people usually like me to look at Bitcoin, and I don't have that much to say as usual on Bitcoin here. The only thing I'd say is I think here you've seen this pump up on the BlackRock news on the ETF. So what I would assume here is just that it's just waiting for news. So either this ETF gets approved and you're likely, this very bullish development, it's likely going to continue to press higher, or it doesn't, and everybody who bought on anticipation for that is going to have to, is going to puke it out, and it wouldn't be surprising to see us move right back into the scene of the crime, right? Apart from that, I think here the best trade on the board tends to be a trade you're already in, and I think the nicest trade and the nicest dynamic is still to look for this correction to continue into month end, quarter end, and I don't think there's anything too interesting going on anywhere else on any of the other charts. I think this is the most interesting chart, a most interesting dynamic. I would expect, again, if this is going to play out, the NASDAQ to be a little bit heavier, and that's what I'm looking for. So I don't know if anybody has any questions, any chart they want me to look at, but that's pretty much what I'm looking at and what I would be focusing on. Not a lot different to what I've been discussing on the Twitter feed or what I discussed on that latest YouTube stream, but that's what I'd be focused on. USD CAD, yeah, USD CAD, this is a chart where I know a lot of people have been trying to play this to the long side, looking for the correction and risk too. I really don't think there's that much edge here, and this kind of gets wedged and stuck around in between what's going on with the BOC, what's going on with commodities and the broader picture, what's going on with US in the US, and here it's just, it looks like a slow grind death lower. Really, this was a broader range that should have held, and the fact that it's not holding is just not pretty, right? You see how it broke below, and as soon as it bounced back, it got sold. Previous support acting as resistance, this 10-day being respected. So what to look for? I mean, again, I think the next interesting support is probably coming in around that 130. You've got that 200 week, that 100 week coming in there, but really it looks a little bit like death. This is a key level because you see you've got the moving averages on the weekly, which translate to the same moving averages again on the monthly too. So this is that whole 130 is a very interesting zone. So I think you need that 130 to hold, or that really opens up a very ugly break, right? You see this whole move, that opens up a potential break all the way back into the 120 in the 200 month if that doesn't hold. So if you're looking for longs, that you're looking for buyers to come in supporting around this zone. And if you're short, you're still sitting pretty. You don't want it to close back above the 10-day moving average. But again, I don't see a lot of edge here. There's nothing particularly I really would want to do on USD CAD. URA, more and more positive news on the uranium front. I think it's just that everybody who wants to be long is already long, so it's just kind of hovering here, right? It's stuck inside this sideways range, and there's just not that much going on. I think you need a much stronger catalyst to get more buyers in, because everybody's been buying. Everybody who wants to be long is already long, so there's just not much edge. So pretty much, as long as it's stuck inside this 24, call it 24.17, 24.18, it's just much to do about nothing. It's a snooze. Unless we get daily, weekly closes outside, there's just not that much going on, right? Unfortunately, that's it, right? There's just not much to say. Anything else? Looking if there's any interesting chart, but really, you've got Aussie key level here again, right? Again, it's all about that that dollar and also what commodities do, but you can see here, right? Normally, this should have been a strong support, kind of 50-ish back of this move. You've got all the moving averages, and it's just not moving. Okay, Testo, we discussed JPY at the beginning. It'll be on the recording. So here, you know, this is something to watch, right? Because if you get a daily closes, weekly closes below Friday's low, this opens up a much bigger correction back into these lows, right? Kiwi, similar, it's hovering here. See how it's still, pressure is still on. If it closes below the 200-day, this is going to open another retest back into these lows. Cable, you'd want to watch this previous high confluence here. Day close below opens up a test back into the 123. And again, this is all essentially really the same move, especially as we go through month and quarter end, and as we start to see this more important data. Is the dollar going to catch a bid or not, right? And that's going to directly impact your bonds, yen, all the key. It's all about that dollar. But what's here, we're just seeing some, you know, end of month, end of quarter flows. But in terms of dollar flows, what do we need for an aggressive move on the dollar? We need data to guide, right? Because right now, the FOMC is saying rates higher, still haven't peaked. Even when they peak, they're going to have to stay there for longer. The market is saying, I don't believe you, right? So the only thing that could convince the market to probably start to adjust price in or slightly believe the FOMC is if the data starts coming in hotter again, right? So that's what we're going to have to wait to see. Okay. So that's what I'd be focusing on. That's what I'd be looking at. Thanks for hanging around, guys. Recording should be live in a little bit. I'll post the recording on the blog too. Have an awesome one. And again, be careful going into the end of the month, end of the quarter, because remember, a lot of the flows are price insensitive. They just have to go through. So don't get in trouble. All the best. Talk to you guys soon, guys. Bye-bye.